And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Wednesday, October the 5th, 2022. It was basically what started as a corrective day, ended up moving up, putting in a slight new high over what we saw yesterday, and then backing off of that high. I'm going to start here on the daily. And before I get into all of this down here, I want to take a little bit of time and present an additional view that pertains more to downside, additional downside. So it has been discussed in the comment sections of my YouTube channels that what about the possibility that what has taken place thus far is just minor wave one? So I took that out today and I took a look at it and I said, okay, well, I can present that. And it does still remain and keeping the B wave, primary B wave in place at its current high. And the C wave would be expected to smash through the low of primary wave A, which sat at 36.39. And the S&P did. And if it just completed wave one, then we have a minor wave two before we again turn and fall off some cliffs. And that makes a lot of sense actually against the shorter term picture, confronting what the markets are confronting between now and October expiration, let's say. We have a lot of earnings coming. We have all earnings coming. And that season will begin, looks like next week or towards the end. So with that in mind, I'm going to discuss right now. Yesterday, I presented what if the primary B wave was still in process and still required an intermediate C wave advance to cap off the primary B, and it would end up back somewhere around that high, which is 43.27. So that was yesterday. Now today, and again, I'm not saying either one. I feel that what I attempt to do here is to present, this is a big picture view. So what could possibly be taking place on this big picture? And then I want to bring it down to if it surpasses this level, priority or probability shifts to this view or that view. So I'm giving you two views. One will be to the upside right now. The other one will conclude some additional upside, but it has a quicker turn to resume downside, and it would be just as strong as if this next wave ended up here. So let's discuss this view, and it is more of the downside view. So that's with the assumption that primary wave B is complete. We're in a primary C wave, which will consist of 5 waves of intermediate degree, of which I've counted out intermediate 1 and intermediate 2. I had placed an intermediate 3 under here, and that for right now remains. For right now remains. But I'm considering an additional, because I have received some discussion about changing it and moving that third here versus allowing a minor fifth to come in and putting it down below. Well, now I got one better. It's like it's not only going to be a minor fifth, it's going to be a minor third. So there's a lot more on this particular count. So again, intermediate 1 and 2 complete. Inside of intermediate wave 3, what if minor wave 1 is what completed at 35.71, and we are in a minor wave 2 corrective phase? First thing we want to do is let's take a look at what are or is the potential for a minor 2 rally. Most often in the second wave, we know that the market can rally back up to 50% to 62%, and that right now, just straight Fibonacci, is 38.73 to 39.44. And in between, we have 38.02, which we have come across and managed to get a little bit higher on today. But the market looks like it's going to open pretty much where it closed, right there at 37.95.75. Oh no, 2 points higher. Excuse me. In any case, we have that, and if this is a minor 2, right? So we also have the 20, then we have the 50 sitting at 39.21 with that ultimate resistance at 44. So we've got some good levels, and the market could certainly rally through Friday if it wants, as we approach that expiration, because that's what's to start to happen as we roll closer to Friday. Things will start to swirl around particular levels within stocks, which will produce some particular levels within the indexes. And so then we have expiration again. But, so I digress. So under this particular count, what that opens up, excuse me, is a lot stronger potential for a very strong wave 3 down. So can it happen? Sure. I would be remiss to say no. But now I want to make part 2 very clear here, that as a trader, I'm not choosing my trades off of a daily chart. I don't necessarily even choose my trades off of an hourly chart. I'm trading off of a 2-minute, 5-minute, and taking a look at an hourly and sometimes the 15-minute chart for my trades. So I'm trading day to day. I'm a day trader. I don't carry overnight positions. So that leaves me open to participate in what the market happens to be doing, which lately, the last 3 days now, has been strong upside, sustained upside. We had a nice correction today, by the way. So now I'm going to drop down. So on this, we'd be looking for a third wave, right? I'm going to take it one more step and go up here, a third wave from wherever this finishes. And so what we can throw back up there, I'm going to take this particular fib off. I'm now going to put on for that C wave, right? If we're leaving that primary C wave in place, primary B wave in place, excuse me. And now we want to take a look at what can that primary C wave do, which actually the numbers haven't changed. All right, so now I'm going to drop this back down to the daily. And we're going to be taking a look here. No, I'm not going to take, shoot. Sorry about all this. I tried to be quick. I'll just open it up here. So what we have is, if we're looking at a wave 3, a minor wave 3. So this scale is fibs using, if we're in a primary C as it relates to primary A, well, we're getting 1.618 for a primary C wave down to 24.35. If we're just dropping and getting ready to drop into 3 of minor of intermediate 3, minor 3 of intermediate 3, it could be really pretty strong kaboom on a third, and then a 4 and a 5, and then we're just finishing intermediate wave 3. Possible, but it would be very deep before primary wave C would be complete. And then we are looking at the lows from not only March of 2020, but then we're looking at the lows from 2009 to eventually come into focus at some point. But definitively, we'd be looking at the lows to come into play from here, which is 2174. So we could be looking for the C wave to bring us down right into that, to complete that cycle degree A wave. So yes, this counts, because it would be that third wave's time to catch up and really knock us out of a lot of this very quickly, and then flounder, and then eventually down. Again, remember, intermediate 1, intermediate 2, intermediate 3, intermediate 4, intermediate 5. Each one has to play out. If we're still inside this intermediate third wave and we're going to come off in a 3, this third intermediate 3 is going to be very big, which will fit. And then we could have a smaller intermediate 4th wave and then a smaller intermediate 5th wave. So either way, we still can have some very stronger downside, but this is would suggest that it's coming up next. That's that count. Now I want to take it back down, and then we're going to go on the other as the count stands, and that is that we are in an intermediate fourth wave. But we have markers, and that marker is 38.83. If this goes soaring past 38.83, then it's not going to be this intermediate third wave down here at 35.71. It will not exist. It will be left over probably as minor wave one, and then a much stronger wave to come. Because we would be suggesting as well that we have those additional levels. And nope, I don't want that one. I want, oops, here, if that's minor one, it's going to encompass all of this. So we not only have the 38.02, but we have here that we have 38.80, 38.73 is 50%. But then here's minor, not minor one, but here's wave one. And where actually intermediate wave one sits is going to be important. And that's the one that sits at 38.83. Right there. 38.83 is where intermediate wave one. So if this is intermediate wave 4, it cannot overlap wave one. And that's at 38.83. So that would give an additional boost. If it goes cruising past that, because we know we have 38.90, we know we have 39.44, and those fit within a wave 2. Well, we will know the story, and then we'll be able to quote off of that. Again, being more flexible if you're going to use Elliott wave. And again, getting back to is it predictive versus reactive? It is both. If that is what's enforced, then those would be the levels. If you want to place risk at these levels, yeah, you do so. So it depends on how you trade and what you want to trade. As a day trader, I don't care. I'll follow what it does and then play along as best I can. So I don't feel that having the conversation about being reactive to being predictive, because I do believe it does both, because we know that we're in a larger downtrend. We already have, and I believe most people have accepted, that interest rates and inflation, those are both real problems right now, and we have several others. So inconsequential as to why the market wants to move in a particular direction, I'm able to follow it. Now, either way, we do have that marker down there at 38.83. Above that disqualifies this as being in the intermediate wave 3, and it places more weight on it being actually minor wave 1. Then we're going to be checking other levels up here for the market to move to. And it's not all that much. We were above 3,800 again today. We're looking at going above 3,900. It's not like it's a leap. It will feel like a leap of faith, but it's not the end of the world. And it doesn't necessarily change the overall structure that continues to suggest we have additional correction coming. Inflation is not done. Interest rates coming down is being played out in the futures markets, not in the real world. And that is saying, well, the market is telling us that it's going to do that. Okay. Has the market ever been wrong? Yeah, it has. And unfortunately, sometimes it causes crashes. So enough. So in the S&P, there's our levels. This is still a great trade, and I'm telling you, it was great. So it actually could be, again, 1, 2, 3, 4, 5. This could be all the 5, and then we pull back. Again, today's pullback was nice. It came down. Let me see. I think, what did I was running them, I think, from here to here. And it came down to, it did not come down to 382, because I was thinking if this is 3 and this would be a little 4. Or I actually did one other that if this was A, we can do that one as well to say if this was A and this is the B, it still didn't come down. 382 would have been pretty good, but it came down inside of the moving averages and it held at 200 and then launched again. So I consider it could be an ABC or A, B, or 1, 2. I kind of thought A, B if we're still within that intermediate 4, which, yes, is still alive. And if it is, then it truly still can't go above this level. And that puts a lot of pressure on what would be considered a C wave. So a lot going on, we'll see. But here are our levels. We have 3802, 3808, 3873 to 3880. Then we have that 3883 no fly zone. And then above that, 3944. And even around to 3944 and a turn gives us more ammunition that this turns into an ABC. And therefore, this does remain minor 1, and this goes into a minor 2. And if it gets up here, definitely minor 2. And then it's another fall off the cliff. Again, not trying to shake the boat. I'm not saying sell everything now. Gather your evidence and know what your trigger points will be that will trigger you from one side to the next. That's trading. That's figuring out your own trades and where you will switch. And you can play premium. You can play options. You can trade both sides and make money as the market rises and then goes down. Okay, over to the NASDAQ. In the NASDAQ's got the same story going. Again, if I take it all back, and this is minor 1, then you're kind of looking at A, B. Now here, this guy did much better in getting down to support. See, we had 11,375, and it got down to low 11,375. And the bar before got below it slightly at 366. So it reached that support, held, and launched. So it wasn't that it should have been a complete surprise, because that was the level that was given yesterday. We were looking for the pullback, came in nicely, A, B, C, and then we launched. And then we went up to new high and we're pulling back. And we're still kind of pulling back. So again, could it be 1, 2, 3, 4, 5? Yes, it can. And then we pull back again. So we're going to let the market be the market, and we'll kind of just anticipate what could be happening. In fact, we can put this, take that, and put it over here. So 711 is where that high would be. And then we'll put it right there. And so pulling back again, we're looking at support at 397, 300, 204, 132, 133. That's a zone for a pullback. And again, if this is 5, or, these are going to be the Fibonacci levels for tomorrow if the market continues to go down. If the market continues to rally, we just had them up there, and I'm going to put them back up. Do that. Just come out of my way. Okay. So we're doing the entire move. I'm putting that there and putting it there. So we have 382, which it's already just did to this afternoon. It kind of came across, and that's above 11,700. So technically, that was the 382 for the bounce back up. So it's kind of hit that level where its first wave would be, I'll go back out to that intermediate wave 1. I think it's down just above that 11,900 area. So here we have next up 11,941. And seriously, break, that's where the next is. Got a couple of points in between, but of importance on a Fibonacci basis and on this particular move, that would be indicative of where it could go. So upside could gain some steam. Now put it back together. And this is -1, and we're looking for a -2. There are your fibs. All right. So we surpassed 382, where it could be heading to 11,941. It likely breaks the other right in this area, shoving this to, again, just a -2 of an intermediate third wave. And we're in a -2 of an intermediate third wave. So all we're dealing with is this wave right here. And that leaves us open to continue to climb. 11,941, 12,190. Again, what's going to push it? I don't know, technical. But does have the capability. If this indeed is -1, then we're looking. Now, what's going to give us the hints? Let's go back out to that daily chart and take a peek. Wave 1 comes down to 11,921. So it really, that comes before this 11,941. So the NASDAQ actually is in a little bit more precarious picture. Because up here, it's got to stop below. It's got to stop a good 20 points below at 11,920, 11,920. That's where that intermediate wave 1 is. So we're getting a little bit closer than, but maybe the same as the S&P. But if it hits it, then we're into a different situation. Let's let the markets tell us. Again, predictive, yeah, we're giving you what the possibilities could be for tomorrow, where you could catch the moves, and what could happen as each level breaks. If you're an option trader, work it out with the spiders or the Qs. Both options trade very, very well and less risk. All right, I'm going to leave it all right there, and I'm going to say the next update will be on Thursday, October the 6th.